Yo, let's go with y'all boys. Part two. We're back. I forgot to make the video yesterday. No one watched it anyways. It's cool. Hopefully y'all watch this video because this video is really important. Liquidity is a very important topic when you're trading. If you don't know what liquidity is, it's when the market tries to wipe out a certain group like a buyer or a seller. Price has to correct to make money so it can continue to push down. That's exactly what liquidity is. I'm gonna break it down in a really simple, easy way. This video should not be longer than like 8 minutes. It's really simple. Liquidity. What is liquidity? Liquidity is when the market wipes out buyers or sellers to continue its trend. The market has to correct in order to make more pushes. Like the market can't just go straight down. You feel me? Like when you look down or you look at this chart, you see it's a downtrend because the market is correcting. It's correcting, right? You know what I'm saying? It's correcting. You know, it has to keep continuing. It has to keep correcting so it can keep pushing downwards. Feel me? It's a breaking structure. That's awkward, but it on the higher time frame, it's still fine. Right, this is the 1 hour time frame, by the way. But liquidity is really simple. You see that all this is a downtrend. All this is a downtrend. How do you know when liquidity starts? How to not get wiped out by it? How to not be all up in it and whatnot, right? As I said in the last video, let me just make another chart. Let's say like the chart's moving, like I'll give you a sell because you know what I'm saying. Say break a structure, we'll say consolidating. We get a break in structure, right? I'll mark this. You're gonna mark that high, that equal high that it made. You're gonna mark that low it made. You're gonna say inside this box, we're looking for a breakout, right? This breakout is our indicator, okay? But you don't trade indicators because why? Because you'll get wiped out by liquidity. Liquidity collects those FOMOs and those people who enter late. It's not smart to enter late because when you enter late, you enter here instead when you can enter here and make way more fucking money. Like way more money, like a hilarious amount of money, like way more. Even that little piece right there. Oh my God, what the hell is that? Yuck. Even that little piece right there. That's a lot. Why do I have no data on? What the hell is going on? Anyways, liquidity is important, bro. You need it. All right. Liquidity is really important. You gotta know when you're looking for it and when you're not looking for it. I'll show you some right here, and then we'll go right back to that. Price has a really huge pushback, and some people might have entered here. However, let's say on the 4 hour time frame, I guarantee on the 4 hour it's going to be different. Yeah, on the 4 hour, we waited for a breakout around this, around this right here, right? You let it retest that level, and then you re-enter. Like it, bro. I don't know. This is super simple to me. I don't get it. I'm sorry. I'm not trying to. We notice a high. We notice a break in structure. We say, hey, that's our box from here to here. I'll do a markup video next, but this is how you don't get wiped out by liquidity because you would have probably entered here and got stopped out. Maybe. Not really. Nah, because if you put your stop loss like here, you would have been good. But you would have made way less money. You get me? So when you can notice those big breakouts, don't trade that indication like I said. So this right here is indication breakout. I call it breakout. The indication might be better for you. This is an indication. Do not trade. Don't trade that indication, bro. You're wasting your time. All right. When you trade indication, you leave yourself out to FOMO. Don't trade high news indicators. I don't care. It's going to correct. Usually in the first hour, it'll show you bull BS and then it'll correct. Don't trade indication, bro. Instead, wait for the retest. Oh my God. Yeah. Wait for that retest. Feel me? Let it retest. Let's say breaks out, goes as low, but it comes right back. As long as price never breaks your structure, which would be here because we're on a sell and we're looking for the next high. And if it breaks around this structure, you want to make sure that price on the 15-minute time frame doesn't look weird. But this is also the hour. I don't know what I just said, but it can test this. It's just a little bit iffy because if it tests this, then you want to wait for that close. You know what I'm saying? Also, you want to wait for all those closes. Let it break, let it retest. It can retest anywhere in this box. As long as it doesn't break this structure, we're fine. It can break this structure. It's iffy because it could still be consolidation and you have to mark that up still, but it can retest the box because I've never really seen it actually like go up and then like like that. I've never seen that really, but it will go up. Let's say it tests around this equal high. We know price is bearish under this level. We know the price is bearish guaranteed to here. Why not take it to here? So we say, hey, once it retests a certain level that we say it's bearish, you're good. But we're not looking to play inside consolidations box. We're looking to hit this level. So you can take that too. I mean, I don't doubt it's, but I'd say wait for that hour close if you're trying to play that risky. It's totally fine if you do. It's totally fine. You'd want this right. Okay, never mind. Whatever. You would want this right here. Not this. I know it looks good, looks sweet. No. You want this. You want to trade here, not here. You can trade here once you get really good, but you're not good now. So, all right. What do we learn? Liquidity wipes out those buyers and those sellers. On the higher time frame, you should look for liquidity sweeps, not on the lower time frame. You should never look on the 15-minute time frame for a liquidity sweep unless you're scalping. And then even then, I don't know why. But you don't want to get wiped out by liquidity. You don't want to trade breakouts. That's the only way you get wiped out by that. When you trade breakouts, that's the only way you get wiped out by liquidity. Now you're gonna get it wrong sometimes. I think I got it wrong a couple of times, but that's life and shit. It don't matter. Stop trading liquidity. Be good. Be great. That's really it. There's really nothing much to it. I can't really give you like any game on it. Like this is a liquidity sweep at its lowest point. It's gonna correct if we know. I mean, oh Lord, I'll tell you where this is going. Okay, doesn't break this high. Makes a lower high. Makes lower lows. Let's check that 15-minute. Watching a master at work. Okay, it's making lower highs, lower high. Yeah, this is a sell to here. This would be once it touches this level, you sell it to here. Look, bro, it's simple. It's really simple shit. It's really simple shit. It's really simple. So here, and then all in all, ready? I'm gonna show you again. Let's say we're consolidating. This is textbook. That's not consolidating, but we get a breakout. Let it correct. Let it test anywhere in this box. If it doesn't break here, we're okay. And then once we know, hey, price hits this area because that's where we would want it to, we can take it to here. That's it. That's how you run away from liquidity. Is it correct every time? No, you're gonna hit by news, but it's a really good metric. That's it. I can't give you any more sauce, bro. There's no skill on liquidity, bro. Just don't FOMO. Wait for a structure. In the next video, I'm gonna talk about probably like entries or something.